Good morning, good afternoon, good evening, traders from across the globe, and welcome to the 1,454th edition of Short-Term Trading Live with Oscar, and we will be talking about short-term in this video. I can say this, if you've done your homework, you did your analysis this weekend like you're supposed to, read all the newspapers you can get your hands on, all you can say and think about the economy and the markets is this. Have you read it? Have you seen it? It's insane. It looks like the biggest rally in the world is coming. I have to say, for short-term trading, I love what I see. And we're going to go over a bunch of charts. And we're going to talk about a little bit of the stuff in the newspapers. And we are going to see what these markets are going to do. This video is coming to you on a Sunday night for trading Sunday through Monday, April 4th, 2016. As we know, futures trading is extremely risky, causes substantial financial loss if you get it wrong, is not suitable for all traders, and you've got to know that a stop is your best friend. And remember this, many people try to trade without stops, but a stop is like having your mother screaming at you, telling you brush your teeth in the morning when you don't want to do it. You know what I mean? The stop is there to make you do the things you don't want to do, like take a loss. So put your stops in. Listen to your mom. Put your stops in. Put them in first. Listen to me if you can't hear her yelling at you in the background. Just make sure you stay safe, all right? It's a tough game. Traders, what are we going to discuss? In this video for Trading Sunday through Monday, right off the bat, red, excuse me, did I just call that red? Right off the bat, a green OMNI, emini, S&P, NASDAQ, Russell, and applaud for that one because we love green OMNI. Now, I will say, the magic, newspapers that we've seen and the charts and everything else, they point to the markets going up the whole week. I mean, like, up, here we go. So whatever's going to happen with short-term traders, we'll look at it one day at a time. But that's what I'm seeing from this weekend's analysis and reading the newspapers. The euro, the Russell, soybeans, bonds as well, and Apple too. You got to see these charts. I don't know if I'm even going to present the bond chart to you. It's fantastic. But I will show you Russell and Apple and soybeans and euro and all the good stuff on the board. What else is there? Gold looks like it's going to take one on the chin for the next couple of days. Now, in the last few series of videos, I gave you some longer-term views, intermediate-term views. Tonight, very short-term trading. What's going to happen between now and the close tomorrow? Euro, Russell, soybeans, bonds, and Apple look like they're going up. Gold looks like it wants to take it on the chin. I will see you all at livewithoscar.com. With no further ado, let's go look at some charts. Russell 2000, first chart this evening. This is the daily bar short-term trading. I know I've showed you a big head and shoulders on the weekly, but that takes weeks and weeks. Let's look at short-term. Short-term trading, the daily bar, we are above the OMNI Trading Academy's proprietary moving average, or better known as OTAPMA. We are above it. We had a bull flag here, which got us above the OTAPMA. And if you ask me, this is another very nice little bull flag that's going to take us higher in the Russell this week. So that is your Russell 2000 leading into Sunday, Monday. Look at the emini S&P. Look at the channel it's been in. I've got these, they're light, but look at how many, well, this one doesn't really count. Look at how many times we're bouncing off this channel. And that should be the target because this is what's been the progression, right? Short-term trading here. Boom. I think that's where we go next. I think this whole week there aren't many reports to get in our way. The charts look rosy. The papers look rosy. I say we continue with our head test this week and move straight up. Nothing goes up every single moment, but I think overall you'll move higher this week. Euro currency. Now, if you are an analyst, you might notice your indicators are starting to look a little overbought and a little over this and a little over that. I say the concept of overbought is nothing more than a concept. Indicators can stay stretched for weeks on end at the top of their range. Let's say here's your indicator base. It can stay up here for weeks while a market is overbought. If you ask me, there's no such thing as an overbought market. When it turns and comes down, that's when it's been overbought. Until then, if you believe in the Oscarism known as an F flag, then put your indicators away and buy the dip in this F flag and expect euro to move higher. for trading Sunday through Monday. You are above the 200 bar moving average. The euro is looking very smart. That is an Oscarism F flag. So we are buying dips in euro, buying dips in Russell, buying dips in emini S&P so far. Then you've got soybeans. Traders, if you recall, I showed you that huge pennant flag in the last few weeks and told you the soybeans looks like they're going to break out. They did break out. They're in this channel. They put in a bull flag, got above the 200 bar moving average. Inside the channel, moving higher. We expect soybeans to continue to move higher throughout this channel. We are buying dips in soybeans for trading Sunday through Monday if we can get them. And of course, there's more. Look at the gold. The gold looks like it's going to take one on the chin. Why? The same sort of analysis I'm showing you in the other charts. You are in a channel right now from top to bottom. Boom, very quick. Then it rallies up, almost hits the bottom, boom, hits the top. It's coming down. It should at least almost hit the bottom, if not hit the bottom, on its way back down. So you should have gold moving lower, even if it ends up higher at the end of the week or next week, after fulfilling the bottom of this channel. If it doesn't break it and moves back up, we'll deal with it. For now, we're expecting it to get down here, and we'll see what happens once it gets there. That's your gold. Then you've got the decoupling of crude and the stock market. Traders, if you ask me, this is the best thing to happen to our economy since sliced bread was invented, baby. This is what we need. We need the crude to turn into a commodity and leave the stock market alone. Now, when crude was $100 a barrel, it was a big piece of the stock market. Now that crude is in the 40s and 50s per barrel, it's not even in the 50s, let's call it the 40s for now, it stays in the 30s and 40s, it is no longer a huge piece of the stock market, it's no longer a huge piece of the economy, and it should continue to decouple. When we started looking at the decoupling, we were down here. And this is what's happened so far. And boy, that's quite the decoupling. And it's continuing. Once again, another round of applause. This is what we need. The decoupling of crude from the stock market will allow the stock market to continue to rage higher and hopefully get right past that big head test on the weekly chart and just continue moving higher. So you gotta love what you see there. And then there is this, traders. Look at Apple. Apple is USA's largest stock. It's worth $609, maybe $610 billion. In fact, I think it's the world's largest stock. That is a big thing when you see it make a bull flag, staying inside of a channel and getting above my OMNI Trading Academy's proprietary moving average. That's something to pay attention to. At least 112 coming, probably higher. Short term, 112. Likelihood is 116 comes our way in Apple. A lot of charts look fantastic in the stock market. A lot of charts are above OTAPMA. And more importantly, a huge amount of charts are now above the 200 bar moving average in the stock market, stock charts. That's a big thing. The fund managers love to buy when you get above the 200. So keep an eye on Apple, keep an eye on the stock market, and I will see you all at livewithoscar.com. Traders, that's my technical view. So the economy that you've seen, and that's what it looks like, right? It's like, so in the charts and in the papers, we're going to go with it this week for sure. Now, what's been in the papers that caught my attention more than anything else is this. Valuations for companies have dropped dramatically. And I'll tell you right now, from my 35 years experience, when the ratings companies drop their expectations on stock reports and on monthly, quarterly reporting, it propels the market much higher because these guys beat the earnings hands down. Another wonderful thing. Let's hope we get right past the head test and blast off in this market. Day trading, we're buying the dips in all the markets here. We'll see you all at livewithoscar.com. Come join me in my free trading room and let me help you stay in check, understand the markets, and learn to be a better analyst. Traders, remember, keep your emotions out of trading. One of the best things you can do to help yourselves with that is say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stops are in. once again, let's hear it from Natalie. You ready? You go, Natalie. Good job. See you at the site. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.